Cryptocurrencies like Bitcoin can seem intimidating, especially for people who aren't tech-savvy or don't have the resources to invest in expensive mining equipment. The world of digital money often feels out of reach for the average person, filled with complicated jargon and high barriers to entry. But Pi Network is trying to change that by making cryptocurrency simple, friendly, and accessible to everyone, no matter their background or experience. Instead of needing expensive computers or technical know-how, Pi lets anyone earn digital coins using just a mobile phone. All you need is a smartphone and a few seconds each day. The goal? Make digital money accessible to everyone, not just tech experts or early adopters. Pi wants to break down the barriers that have kept so many people out of the crypto world. All you do is open the Pi app and tap a button once a day. No technical skills required, no complicated setup, and no need to worry about high electricity bills. This simple action proves you're real and helps secure the network, making sure that only genuine users can participate and keeping the system fair for everyone. Pi is still in its early phase, called enclosed mainnet, so you can't trade it for cash yet. Right now, your Pi coins are locked within the app as the network continues to grow and develop. The creators want to build real-world uses for Pi before opening it up to the public market. They're working with developers and businesses to create an ecosystem where Pi can actually be spent and used. It's a slow, steady approach focused on building a strong community and making sure the network is secure and valuable for everyone involved. In short, Pi Network is a global experiment to make cryptocurrency easy and inclusive, connecting people from all walks of life and from every corner of the world. It's about giving ordinary people a chance to participate in the digital economy, even if they've never owned cryptocurrency before. Whether it succeeds or not, its unique approach is attracting attention from users and businesses alike, sparking conversations about the future of money. Pi could be the first digital currency truly built for everyone, designed to be as easy to use as any other app on your phone. And that's why it's worth paying attention, because it just might change how we all think about money in the digital age. Pi Network keeps things simple, no mining rigs or complex math. It uses the Stellar Consensus Protocol, relying on users to form security circles with people they trust. By checking in daily, you help secure the network and earn Pi coins. No heavy calculations, just a tap to prove you're real. The more trusted your circle, the more Pi you can earn. To keep things fair, Pi requires identity verification, just like a bank. This stops bots and fake accounts, making the network safer for everyone. You download the app, tap daily, build your circle, and complete KYC to collect Pi. It's a social, collaborative approach to digital money. Pi is as much about community as it is about currency. Why should banks care about Pi? In a word, customers. But let's dig deeper. The financial world is changing fast, and banks need to keep up if they want to stay relevant and competitive. Pi Network already has tens of millions of users worldwide, people who are not just familiar with digital wallets and new technology, but who actively use them in their daily lives. For banks, this represents a ready-made audience that's open to modern, digital-first financial services and eager for innovation. Integrating with Pi could help banks attract new, tech-savvy customers, strengthen their brand, and stay relevant in a rapidly changing world where digital transformation is key. Fintech startups are already luring away younger generations with easy, digital-first banking. Banks can't afford to ignore this shift. Pi's core principles, low fees, fast transactions, and global access, are exactly what future customers want, and what will set forward-thinking banks apart. Banks can also reach the unbanked, people who have smartphones but no access to traditional banking, opening up entirely new markets. Pi offers a way to provide essential services like microloans or international payments to these new customers, helping banks grow their impact. By joining Pi, banks could expand their reach, innovate faster, and become leaders in the digital banking revolution. Ignoring this trend risks being left behind as the world moves forward. Pi is a chance for banks to adapt, grow, and serve a global, digital-first generation. The opportunity is huge, and it's only getting bigger. The time to pay attention and take action is now. If a bank wants to integrate with Pi, security and tech are top priorities. First, banks need a secure API to connect their systems to the Pi blockchain. Cybersecurity must be upgraded to protect digital wallets and prevent attacks. Compliance with anti-money laundering and financial regulations is essential. Banks must test if Pi can handle high transaction volumes reliably. Staff training is crucial. IT, legal, compliance, and customer service all need to understand crypto basics. Building internal expertise is a must before launching any public service. It's not just about tech, it's about trust and reliability. Only with the right systems and people in place can banks safely explore Pi integration. Preparation is everything. Imagine opening your banking app and seeing your Pi balance right next to your regular money, all in one place. No more switching between different apps or wallets. Everything you need is together, making it easier to manage your finances. Sending money abroad? Instantly convert pounds to Pi within the app and transfer it worldwide, with lower fees and faster processing than traditional banks. Your friend receives Pi in seconds and can spend it directly or convert it back to their local currency. If their bank supports Pi too, it's seamless. Banks could let customers buy or sell Pi securely, right from their trusted banking app, avoiding risky online exchanges and scams. Small businesses could accept Pi payments from customers, with banks converting it to cash instantly, making transactions smoother and more flexible. This makes using crypto simple and safe for everyone. No need to be a tech expert or worry about complicated steps. Customers can manage both digital and traditional money in one trusted place, keeping track of everything with ease. For businesses, it's a way to tap into a huge new customer base and offer more payment options. Pi integration could make banking more global, convenient, and future-ready, connecting people and businesses everywhere. It's about making digital currency a natural part of everyday life, so everyone can benefit from the future of money. With new tech comes new risks. Volatility is the biggest. Pi's value could swing wildly, affecting a bank's financial stability. Instant conversion to traditional money may be needed to manage this risk. Regulations are unclear and can change fast. Legal teams must stay vigilant. Security isn't just technical. Customers may fall for scams or lose access to their wallets. Banks must be ready to support and educate customers on crypto safety. Reputation is on the line. If Pi fails or is hacked, the bank's image could suffer. Careful planning and risk management are essential. Innovation must be balanced with caution. Banks need to weigh the rewards against the risks. It's a high-stakes balancing act. Despite risks, the rewards for banks could be huge. Early adoption signals innovation and attracts new, younger customers. Banks can earn new revenue from Pi trading, payments, and business services. Integration offers valuable data on digital currency trends and user behavior. This insight helps banks develop better products and smarter strategies. Experimenting with Pi now prepares banks for a digital, global future. It's about learning, adapting, and staying ahead of the curve. New services mean new income streams in a changing financial landscape. Future-proofing starts with small, smart steps today. The potential upside is too big to ignore. Ready to explore Pi? Start with a small, dedicated research team. Learn everything. Read white papers, join forums, run test nodes. Include IT, legal, compliance, and strategy experts. Begin with an internal pilot. Let employees test sending Pi in a safe environment. Use this to build and test your tech and compliance processes. Next, try a limited customer trial. Show Pi balances in the app, gather feedback. Don't handle real transactions until you're confident in security and compliance. Engage regulators early. Be transparent and collaborative. Take slow, deliberate steps to minimize risk. Smart exploration beats reckless leaps. Is Pi Network the next big thing, or just a passing trend? No one knows for sure. It's still in development, with big hurdles ahead. But its massive, engaged community shows there's real demand for accessible digital money. Even if Pi itself doesn't change the world, the movement it started might. For banks, the smart move is cautious curiosity. Learn, experiment, and stay alert. Don't ignore it, but don't bet everything on it either. Start small, talk to customers and regulators, and be ready to adapt. Whether Pi succeeds or fails, it's a wake-up call for banking. The future is digital and customer-focused. Banks can choose to lead or be left behind. Engaging with new ideas like Pi is how banks stay part of the future conversation.